I wanted to get Peter Schiff on today to pop in because obviously you've got a lot of analysts saying they expect a rate hike of 1% for 2 years, 3 years. He's been saying, no, there's not going to be a rate hike when they keep claiming it's imminent. They're going into this QE, Buzz Lightyear, beyond infinity. But they could. I mean, we're about to find out. And they should raise rates, as Schiff has said, under free market conditions. Now we're talking about charging you to keep money in the bank. But if they do, it's going to cause problems. If they don't, it's going to cause problems. They've got all these weird numbers. Factory orders down, manufacturing down the last 2 months, 0.2%. But then they claim jobs are up. I mean, what is the truth of this? Peter Schiff heads up the multi-billion-dollar fund that we're going to be telling you about as well. Europac.com. Where should we start, Peter?
Well, first of all, everybody is excited now about the fact that they believe the most recent minutes, the FOMC, Federal Open Market Committee minutes, basically guarantee a December rate hike. But if you actually read those minutes, they don't say that at all. All they say is that a majority of the members believe that the conditions may be right for a rate hike in December, but they're not sure. It depends on the data, and they're going to make a decision, in December. So none of that to me sounds any different than the rhetoric we've been hearing all year long. So I don't think it's a sure thing, but I would say that it's probably more probable that the Fed might actually move and do 1/4 of a point, not a whole percentage point, but just 1/4 of 1%, which is basically nothing. If the stock market is near record highs, the day before that meeting, and it looks as if everybody is okay with this tiny rate hike.
They might have their cake and eat it too. So you're predicting 1/4 now, because that would be kind of both.
Well, I still think they probably won't do it because, first of all, there's a lot of time between now and then. The market could sell off. We can get a really bad jobs number for November. They can revise down the October number. So a lot can happen between now and then. But if everything happens perfectly, it is possible, especially since they've come out now and said, look, if we do move in December, it's going to be a long time before we do it again. And we're not going to raise rates very much, even when we're finished. So they're trying to take the sting out of the rate hike by promising not to do very much. But look, if the Fed had confidence in our economy, why would they be worried about raising interest rates to 1/4%? Why would they have to reassure everybody that that's all it's going to be and that we don't have to worry about rates ever getting all the way back up to 2% or 3%, which would still be historically very low? Why does the Fed have to assure us that that's not going to happen if the economy is as good as they say it is?
And the reason this is so important is if they do have a point hike, as they say, you've gone over the problems there.
1/4 point.
Sure, no, I understand. I'm saying, let's just say they did have a 1 point, like the media is talking about, versus 1/4 point versus not. How do you see those three different scenarios affecting the economy?
Well, the media, if they're talking about a full percentage point, they're probably talking about over the next year or two. Nobody is predicting that the Fed is going to raise rates by a full percentage point in December. I haven't read anybody predict that. But yes, there are people who think over the course of the next year or two, we'll eventually get rates all the way back up to 1%, which was the lowest that they got under Greenspan. That's where Greenspan stopped. And that's what gave us the housing bubble and the financial crisis. And now, we'd have to raise rates 4 times, basically, to get back to that 1%. But I think long before the Fed gets to 1%, if they actually start in December, we're going to be back in an official recession or close enough to it that the Fed's going to have to stimulate. And if you think about it this way, we've just had the weakest economic recovery ever, and it's been 7 years. And the typical recovery lasts maybe 5 or 6 years. So this is already a longer recovery than normal, despite the fact that it's the weakest recovery ever, and it's required the most amount of stimulus by a long shot. We've never had so much stimulus to produce so weak a recovery. So if this recovery was so weak with 0% interest rates, imagine how quickly it's going to unravel if they start to raise rates. And so when this recession resumes, they're going to have to bring rates back down to 0. They're going to have to do QE4. In fact, they're going to have to get those helicopters out of the hangars because it's going to take a record amount of stimulus to try to breathe some more artificial life into what's going to be.
Well, that's what I was about to ask. If they did do the point over the next few years incrementally and it didn't go the way they wanted and the stock market starts crashing, then wouldn't confidence be even more lost and they can't go below zero, or could they actually charge you to keep money in the bank?
Well, they don't charge you, but they charge some of the lending institutions like they're doing in Europe right now. You know, they've actually got negative rates. And in fact, many of the government bonds now, if you buy a government bond in the Eurozone, you're going to get back less than you pay. I mean, it's, you know, it really is a crazy thing that's gone on over there. So I guess it can happen here too. But that's one of the reasons that it is so dangerous from their perspective to raise rates, because they look that much more foolish when they have to cut them. But I do believe if they do raise rates slightly, they're going to try to cover their tracks by leaving the door open, by saying, look, we just raised rates, but we can go either way with the next move. We may hike or we may cut, right, depending on the data, right? They're going to stay data dependent, which again, I think is all just part of their show. I think they're stalling because the data has been horrible. Ever since the Fed has said they're data dependent, the data's been bad. The data would argue for easier money, not tighter money based on this data, yet they're still pretending that the economy is getting better, even though the data says that it's not.
Wow. Well, looking at this, looking at the wide spectrum of data, we know they cook joblessness numbers, and we know they cook things like inflation. But looking at all the numbers yourself and what other experts are saying, what is the state of the economy?
I think it's very weak. I mean, look, since the last time you and I spoke, we've had some horrible earnings at major retailers like Macy's and Nordstrom's, where sales have just really collapsed. And that followed, you know, we had bad numbers earlier from the Gap, from Walmart. I mean, if this is a recovery, why aren't consumers shopping? If we really are creating all these jobs, why don't the unemployed need to spruce up their wardrobes for their new jobs? I think the fact that spending is falling is a bad sign. All the manufacturing numbers are horrible. You've just got the housing numbers, but you know they're starting to roll over. We just got a housing number this week that showed the fewest number of home starts in 7 months. So that's starting to turn down. I think the data is starting to go the other direction. Yes, we still have 5% unemployment, but remember, recessions always begin when unemployment is low. Unemployment is high when the recession ends, but recessions don't start because of layoffs. Layoffs happen because of the recession. So, when you're just looking at unemployment, you're looking in the rearview mirror and ignoring all the information in the windshield. But, when you talk about inflation, look at the farce that's going on in Europe. Draghi just came out this morning and he's saying, look, I'm going to do whatever it takes to make sure we have more inflation in the Eurozone. He's looking at consumer prices. They're rising in Europe. They're just rising very slowly. And he wants them to rise more rapidly, but just not as fast as 2%, but close to 2%. He wants inflation to be like 1.8 or 1.9. And right now it's, under 1. But think about this. Why would anybody say that what we need is higher prices for our consumers? I mean, Draghi is specifically pointing to oil and saying these low oil prices are a problem. Why? The European Union or the Eurozone, they import oil. They're not producing a lot of oil in the Eurozone. So why is it a bad thing if when a European pulls into a gas station that he spends fewer euros on gas? Why is it a bad thing if his electric bill is lower? Or, or his heating bill?
Well, that's all part of this carbon tax austerity where we're supposed to have less money to teach us to, to not consume too much. This idea that it's good for us to be poor, but the elites are all in giant jumbo jets with red carpets.
They're not saying that, though. Draghi is somehow saying that prices not rising faster is somehow a threat to the European economy.
Oh, I know.
That somehow it's bad. And that's nonsense. But what they really want to do in Europe is they want to reduce debt and they want to lower wages, because Europeans have all sorts of things that artificially increase wages. And the real reason they want inflation is to reduce people's real wages. But Draghi doesn't want to come out there and say that. So he kind of makes up this nonsense about why he's going to have to make sure we have more inflation.
I know. It's all about social engineering. I want to ask you what would happen if Bernie Sanders got elected, what you think he would do, because he's out defending democratic socialism. What a nightmare scenario that would be. But so many well-meaning people like him. Yeah, and if you believe that the Federal Reserve isn't devaluing the dollar, I got some oceanfront property in Arizona as well. He joins us from Europac.com, Peter Schiff. Peter, other predictions, other points you'd like to basically put out there as we go into this Christmas holiday season with what's really happening with the economy? You still say, you've been right so far, you don't think they're going to raise rates because you think something might happen before now and later in December?
Yeah, well, I still think the Fed is more likely not to raise rates than do it, but it's probably a greater probability that they'll do it this time than at any point during the year. But I do think if they do it, it will be a one-and-done scenario, and I do expect the dollar to sell off and gold to rise finally, regardless of what they do, which is why I think people should take advantage of this opportunity now to continue to move more money. That's what we're doing with our clients at Euro Pacific Capital, getting people out of the U.S. dollar, putting more money overseas into the countries that aren't making these mistakes, putting more money into precious metals. You mentioned before the break about Bernie Sanders and about his, form of democratic socialism. Look, just putting the word democratic in front of a bad word doesn't make the bad word good. Just because people vote for it, I can say I'm for democratic slavery, and that doesn't make slavery good. But the problem is Bernie Sanders,
democratic AIDS, democratic syphilis, democratic cancer.
Yeah, in his heart of hearts, Bernie Sanders is a socialist. He doesn't believe in the free enterprise system. He doesn't believe in capitalism. Look at anything he used to write or stand for before he ran for president. He does not believe in the principles that we fought the American Revolution on. He embraces the principles that they fought the Russian Revolution on. But, there's an argument to be made that maybe Sanders could actually help, because by having Sanders as president, he'll screw up the country so badly, so quickly, and it's already screwed up, that he might hasten a real revolution towards free markets, to abandon all this nonsense, because all he wants to do is make the welfare state bigger. He wants to expand, yes, the socialist programs from the New Deal, from the Great Society. The stuff he wants to do would bankrupt the country, bankrupt America. But the problem is we're already bankrupt. So why not go all in on socialism so we know how bad it is, so we can puke it all out and start over again?
I was about to say, I've got red behind me on the TV screen because this country obviously is deeper and deeper in the red, but so is the whole world in this race to the bottom. But you've got a point. I've been concerned if a Rand Paul or a Donald Trump got in and tried to free market fix things, the Congress, the globalists, the big corporations would sabotage it. Then they'd blame the collapse on capitalism. But if we got a Bernie Sanders in, it would wreck so horribly that maybe it would finally discredit socialism forever. But I doubt it.
Yeah, and I thought that was going to happen. That was one of the reasons I was thinking, well, let Obama become president so it all falls apart on his watch. But he looks like he's going to get out of Dodge. This thing is going on longer than I thought. But that is a fear that you get a Rand Paul in there and everything falls apart when he's there. And it's, oh, you see, look what happens when we try capitalism or, libertarianism. So I really would like to see the collapse on a Democrat watch, especially one that embraces government so wholeheartedly as Bernie Sanders. Because if you thought Jimmy Carter was bad, Jimmy Carter got us Ronald Reagan, right? He was the one decent president that we had. And of course, he could have been better if he hadn't made all those deals with Tip O'Neill to increase spending. But we never would have got Ronald Reagan if it hadn't been for the horror of Jimmy Carter. Well, we can get something much worse. And if it happens under Bernie Sanders' watch, we could really come out of something really good on the other side of that Sanders administration.
Well, we can really see the Democrats pushing to have the implosion happen once they hand the baton to the Republicans.
Yeah, although it looks like Hillary still has a 25-point lead in front of Sanders. But I don't understand why. If I was a Democrat, Sanders is hitting on all their key issues because they all are socialists anyway. So at least Sanders admits it. I don't know why they all like Hillary. What is the fascination with Hillary Clinton?
She's a woman.
Is it just the name? Just the maybe she could be the vice president on the Sanders ticket. I don't know. But Sanders, in a way, again, the Democrats should like him. He says everything they believe.
He's a bumbling socialist kook. They should love him. Who's never worked a day in his life outside the system. He's a perfect space alien who just has no connection to reality.
Yeah, he's a perfect Democrat. He's to the left of Hubert Humphrey. He's to the left of McGovern. He would be the most left-wing candidate they've ever nominated.
And he's a kook. They love kooks. All right, Peter Schiff, have a great weekend. Thank you for the time.
You too. Have a great Thanksgiving.